Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Too bad as we blast out of a shortened week into a full week here. Last 5 days of the month is
Correct.
what we call last 5 days seasonality. So it's a full week, and it's always interesting when you first of all you get that full week, and secondly when the month ends on a Friday, and then of course Canada Day is on Saturday, which makes Monday the holiday in Canada, and then you've got July 4th coming up on Tuesday, right? So that's going to be a holiday, and it just kind of makes for an interesting week the following. So this is all very timely here. We end the quarter, we end the month, the month, we end the month, we end the week, we end the month, we end the quarter, we end the semester, and we roll into some holidays, and away it goes, right? So let's talk a little bit about kind of the events in Russia. We did have a coup attempt, and it was the Wagner Group basically turned around from the Ukraine and, of course, went into Russia and got pretty close to Moscow. I think I heard differing amounts of distance, like 80 kilometers versus 125 kilometers, but nonetheless, pretty close. And then turned around, and now they've gone off into Belarus, and now the Minister of Defense is being changed. So that was part of the negotiations. Was either we're going to coup or we want to see changes in the Minister of Defense. So he is being changed. So Sergei is going to replace. Be replaced in the aftermath of the former bodyguard of Putin, Alexei. So maybe the next Minister of Defense, Russian Defense Minister. So some changes there. There's all kinds of other speculation stories on what happened, but it was a fast and furious 20 hours, I guess, from Friday night into Saturday. And the coup did not happen for whatever reason. So there you go. Oil was responding to the events there, and natural gas as well. But we'll have to take a look here and see where we are now, as things have been pretty muted since this was resolved. So let's go through some of the stuff we have here today. I wanted to point out just the SPY and the Qs. And we had our low October the 13th, which was the CPI numbers. We've been on this journey, kind of higher lows ever since. And then we got pretty good signal to noise ratio once the banking crisis was resolved. We had a little bit of dip there in April, but on a standard deviation basis, we held up really well. And then we climbed the upper Bollinger Band on the Qs, same thing on the SPY. And even this pullback that we just had, so Friday we rolled over, and we had 4 trading days last week that were pretty muted, actually. If you look at the way it behaved, it held up really well. And we're sitting here with the potential to actually rise a little bit farther. So we did mention on the last show to expect a change after expiration. We got that change. Actually, the day of expiration was, our seasonality said it should be a down day. It was a down day, almost perfect down day. It was forecast at minus 0.80% performance on average, and we got intraday we got minus 0.71 and minus 0.79 on a close-to-close basis. So it was actually, minus 0.71 on close-to-close, minus 0.79 on open-to-close. So almost perfect. And then we continued with that downward draft, but you can see Qs held up a little bit better than the SPY, and SPY held up better than the diamonds, and diamonds held up better than the Russell. Russell IWM performed the worst these last 4 days. But when I look at this here, I'm not highly technical analysis driven. I acknowledge it. I will look at things, but this chart tells me that we're not in a massive free fall at the moment. So we'll have to go through the seasonality and see what that's all about this week. But looking at these, things held up pretty well. And actually, I think that it could be said, if there wasn't a coup attempt, and the Wagner Group has now left Ukraine anyway, that might be actually bullish for the markets, thinking that Ukraine has a better fighting chance now. So I'm not going to be a hardcore bear here. Are you, Dave? You're going to be a bear?
No, not with the kind of rally we have.
We're not bulls. We're not bears. We like to hedge and trade the relationships. But if we can dial into a little bit of the potential for the week, that can be helpful, because you can always weight your performance long side or short side, whatever it is. And I think it was helpful to some. I got some good feedback about the change that we expect on expiration and the week following. We did get that. So as we look forward, I have to say that we're kind of sitting a bit on the fence, and it could go either way, but it's not looking extremely bearish at the moment, according to these charts. So let's look at the one-day relative performance. That was on Friday. Everything was down. Communication services were down the least. Healthcare, consumer defensive. It did end up being a risk-off day. More things were defensive than not, except that utilities was down in the dumps. So that was interesting. The 1 week, we had, again, a little bit more defensive, with consumer defensive industrials performing the best. Utilities were up there for the week, just not for this day. And then when we look at the monthly, right? So the reason that we look at this is, if we're going to go into this 5-day seasonality, we really need to see how we arrived here. Just prior to the window, which was the Friday, the week before, and then the month to date so far. So even though these have pulled back with a bad week, look at what's been in the leadership: consumer cyclical, technology, industrials. What's been performing the worst is energy. Now, this whole Russia thing could have piqued its interest here a little bit more to move up, but then again, since things might have been resolved, then we could see more of this even this week here, with energy lagging. So again, risk on tends to dominate, and then basic materials. This is all about the US dollar. So if we look at our futures tonight and we're seeing a bit of a pullback in the dollar, and we expect maybe the dollar will be a little bit softer. I know we have interest hikes still to come this year, maybe 2, maybe 3, but people are still looking at that as not such an aggressive rate hikes, systematically month after month. So maybe the dollar can relax a little bit, and then that should put a floor under basic materials. Okay, here's the last 5 days of June seasonality for ETFs. Dave, why don't you talk about things that you've highlighted here?
Yeah, it looks like a bit of risk off. On the long side, we have things like oil, USO, silver, even utilities. But from the short side, biotech, like XBI, the ARC-KK kind of funds, chips, the SOXX, IBB against biotech, SMH. So that, looking along with the monthly seasonality, shows that of the last 5 days, the first 2 of the last 5 days are pretty weak, and especially in the risky stuff, the higher beta stuff. And this is kind of consistent with that. So it's showing more of a risk off tone in terms of the tech high beta stuff.
Well, yeah, I mean, in the 5 days, you could have it start out okay and then, taper off. or the other way around too. It could,
Yeah, the first two are expected to be down, and then the last 3 days are slightly up.
Yeah, well, then that fits kind of like if we just looked at how, the Qs have been performing a little bit better than the SPY up to this point, and it might mean that we start out the week okay, and then, or sorry, we pull back initially and then maybe pop up a little bit.
Yeah,
it's hard to say. I mean, this is interesting because June seasonality is one of the weird months where the last few days are actually positive, or the last day is positive, right? Where 9 of the months of the year have a down day on the last day of the month. So it's just a different type of day here. Okay, let's see here. Looking at this, so let's think about where we are here related to these performances so far. So for the week, basic materials was performing pretty bad, along with real estate and energy and even technology. But technology obviously has been up so much for the month. So I would say that potentially, if the dollar is down, I'm really interested in this basic materials. Going back to this, you said silver has some performance, but the odds aren't great though. So it's kind of on the fence that way. GDX, that's the senior miners there, right?
Mm-hmm.
So what we're looking for is the discrepancy where something has really been performing poorly and going into seasonality window is expected to do better, or vice versa. Something has been performing really well and going into the seasonality window is expected to perform poorly. Healthcare has been holding up pretty good. Could that be something that is a potential short, maybe?
Yeah, like the XBI. I mean, that's expected to be pretty weak.
So this gives us a little bit better of an edge, Dave, because that's strong odds for a down move of minus 1.77% for the week. There's IBB. You could go to your screen or two and look up the odds on a number of factors for XLV, which is this sector ETF for healthcare. You could look at that as well. You're going to talk about earnings later. We do have one of the healthcare group that has earnings. So yeah, I like this. I like this potential here. And also with the ARC, you could look at what symbols are contained within the ARC fund. I mean, it's made up of a number of stocks. We have semiconductors here, SOX and SMH. So take a look at if there's been some excessive performance in that group recently. It may have some short opportunity here.
Mm-hmm. Like
it looks
over
like
the last week, semiconductors have been down like 4.2%. So they've already had a week.
Yeah,
they've had a week already. So the fact that they're expected to be down, we don't have as much edge with semiconductors as with healthcare.
Right. So healthcare would be better. The only thing we have going for us is, how good the performance has been for the year and even for the month relative to the week, though, right? So there still could be some premium there.
Correct.
But healthcare, definitely, I would look at that. And then what about consumer defensive?
It held up pretty good over the week relative to the other ones.
It did, yeah. Okay. All right. Well, let's look at the stocks here. So we've got, interesting enough, we have Eli Lilly on the long side for this 5 days.
Mm-hmm.
Novax as well. So maybe you can pair some things up and stay within the group and stay neutral to the group.
Mm-hmm.
We've had in the discretionary area, like with RCL, that's had pretty good performance this last month. So take these symbols and pop them into the screener or charts or something, and just look at how they've arrived here, because this is what it's saying for this last 5 days. And these are quite substantial performances. So this whole thing is kind of skewed to the downside. I mean, just look at the size of these performances on the short side versus the long side, right?
Correct.
And also the odds. So everything's kind of skewed that way. Here's the Qs versus the SPY for the last 5 days. This fits into this tech sort of risk off for the 5 days. But last trading day of the month, like, we start to improve, right? So the way that this is suggesting is the next 2 days, Monday and Tuesday, are the down days, and then things start to improve on Wednesday, Thursday, and Friday. That's what it's showing us here. But again, there could be other forces that override that, and this is just the probability of what has happened on average over time.
Yeah.
I think it may have been worse, like if we'd had the macro thing where maybe the coup was successful. That wouldn't have been a positive thing, only because if Wagner Group had taken over and had access to, nuclear, and also has a reputation for even more aggressive and bloodthirsty than the Russian military themselves, things that could have escalated and gotten pretty bad pretty quick, which then that would have fit a lot more into our seasonality, I would think. But we'll have to see. There might be a bit of a relief on Monday, and it kind of could be the opposite this time around. We could see actually the market's a bit more positive initially, and then sell off by the end of the week. So I would allow for a flip of this a little bit. If you see it positive the first couple of days, maybe we'll pull back later on. Okay. What do we got here for economic reports, Dave?
Yeah, on Tuesday we have some housing data, the Case-Shiller Home Price Index and new home sales and consumer confidence. And then Wednesday, again, Fed Chair Powell is speaking on Wednesday and Thursday. So the market's going to watch
more
that.
Speak, eh? We always got Fed speak every week. It seems we had 3 days of it last week.
Yep. And then there's again home sales and some inventories. And Friday, some inflation data, the core PCE and personal income spending. So, but I think the main thing is the
consumer sentiment. Even the consumer sentiment at 10 a.m. Final for June. That could be important as well, right?
Yeah.
So. Okay, so full week of things. Let's go into where's my chart here? Okay, let me bring this up here. I want to show what's going on with the VIX here. So we did pop up a little bit. We had expiration there on the on the 16th. And then right after that, we popped up on the 21st here and sold back down. So VIX right now is not showing much movement of anything going on. Let's look at the crude. So up just slightly, not much going on there. Let's put it on the 5-minute here. So that was Friday, and then here's where we are. So it did pop up a bit more, and then this almost looks like there was in the after hours there was already some movement by the Wagner Group towards Moscow in that evening. I got wind of it more like in Saturday morning, but the way oil was behaving looks like somebody got wind of something. But it's tapered off here and it's just up slightly, so I don't think it's a big factor at the moment. Let's look at bonds. 10-year. Oh, steady, not much change there. what have we been doing? We've been kind of just chopping around in a channel here. Let's look at our currencies and then we'll look at our metals. Here's the US dollar, and pulling back slightly now. It just did have a pop there on the 23rd with that down day. So I would expect it could relax now. I would be looking for gold to be up. Let's take a look here at the metals. And gold is up slightly, 5 points, 0.26%. Let's look at the 5 minutes, see how it's been behaving. And so it hasn't hit its peak that it did on Friday, but boy, it sure looks like something was going on. I mean, it wasn't just the market, data we had. We had some economic news, but it seems maybe something else going on. But we're not up too much now, so I think it's almost like boring is beautiful. Markets are not in a frenzy; they're just relaxed. There is some disappointment in China stimulus, so Chinese stocks are probably could be softer. That might affect some of your small caps, the Russell stuff still. Let's just take a peek at the IWM here. And you can see how much it pulled back, and kind of the other ones are sitting above their 20-day moving average where IWM is below it. So it's the one that's hurting the most. Now, there could be a summer rally coming at some point for the small caps. We've seen that movie before. So don't count them out, because usually when you do, they roar back to life. But just be aware of what's happening in that group right now. And what else? Anything? Where are we at with the Dow futures are up 0.22. S&P futures right now up 0.26. NASDAQ futures up 0.30. So again, right at the moment, leaning a bit more to risk on. So we could see a flip-flop of that chart. Maybe initially we're okay for the first 2 days of this week, and then we start pulling back, right?
Mm-hmm.
So we'll have to see how the news rolls out, how the Fed speak goes, middle of the week, all that kind of stuff. But anyway, hope that gives you some insights, some help. And
we have a couple earnings though.
Right. Yeah. You got some earnings. Talked about that. Yeah.
Yeah. So Monday, we have Carnival Cruise Line. So if you looked at the last 5 days of the month, we saw RCL and NC Norwegian as good shorts possibly. So this has been up 43% going over the last month. The past week, it's been down 2%, and it's coming into earnings tomorrow. So if it is weak, you may have a good chance to pull back a lot.
Tuesday, that whole group's been amazingly strong. So
yeah, so we're coming from a really
all the revenge travel, right? They have all the revenge travel.
Yeah. And then Tuesday, there's Walgreens Boot Alliance. Again, they got they didn't have as much in terms of COVID vaccine volumes, so they're getting hurt there a little bit. There's something to watch there. On Wednesday, Micron, that might affect the chip sector, which we were talking about previously. And then Thursday, Nike, again, that shows consumer strength, if it's staying in there or not. And then Friday, Constellation Brands and a couple other small ones. So I think the big ones are Walgreens and Nike. But I like that CCL. If you get any weakness in the earnings, that could be a good pullback for a short.
Well, I know. I mean, that's so elevated. And that one actually is kind of rolled over a little bit more. The RCL, and there's no earnings on RCL, is there? Just CCL?
CCL on Monday.
Okay. But RCL, that's still kind of moving up slowly. But the CCL looks like it rolled already. So maybe a little bit of nerves related to the earnings potentially. That's a good one, though. If it misses earnings, it could pull down the group. That'd be an easy trade on the sympathy with the other symbols in the group, right?
Yeah.
Okay. All right. Is that it for you?
That's it. Yeah.
All right. Well, thank you for your time, and have yourself a good night. We'll catch
All
you
right.
tomorrow.
Good luck.